Have you ever scrolled through your social media and felt like everyone is making millions from a secret crypto coin or a guaranteed training strategy while your savings is just sitting in the bank gathering dust? It's frustrating. You want to grow your money, but the world of finance feels like a loud, confusing room full of get-rich-quick gurus who make everything sound more complicated than it needs to be. Today, we are cutting through the noise. We aren't looking for moonshots. We are looking for a proven, sustainable way of building long-term wealth. This is the ultimate guide to investing, designed specifically for you to start today. Part 1 is winning the war against inflation. If you think keeping all your money in a standard savings account is safe, I have some bad news for you. You are losing your money every single day. The silent thief? Inflation. Imagine you want to buy the latest high-end smartphone which cost £1,000 today. If you take that £1,000 and hide it under your mattress for 10 years, you still have £1,000. But because of inflation, the rising cost of goods, that same phone might cost $1,300 by then. Your phone hasn't changed, but the purchasing power has vanished. The solution? Productive assets to beat inflation. You must move from being a consumer to an owner. The solution is to put your cash to productive assets, primarily stocks and bonds. So, how does it work? When you invest in a company's stocks, you aren't just betting on a price, you are owning a portion of the business that is actively trying to grow, innovate, and raise its own price to beat inflation. When they make a profit, they often pay a portion back to you as dividends. By reinvesting those dividends, you trigger compound interest. This is how you win. Instead of your money shrinking in a bank account, it grows because it's tied to the global economy's growth. Part 2. Ownership. Buying the world's biggest engines. You don't need to be a CEO to benefit from the world's most successful businesses. You just need to be a shareholder. When you buy a share, you are buying a tiny slice of a real company. You own their equipment, their intellectual property, and a claim of their future profits. To do this, you use a broker, a middleman, platforms like Vanguard, Trading 212, AJ Bell, that connects you to the stock market. Why index funds win? Most beginners think they need to find the next big thing, but picking one company is like betting on one horse. Instead, we use index funds. The strategy? Focus on largest companies in the world. Don't limit yourself to the UK. The giants like Apple, Microsoft, and Nestle operate globally. By buying global all-cap index funds, you own a slice of thousands of these titans simultaneously. You should almost always use a stocks and shares ISA in the UK. You can contribute up to £20,000 per year, and every penny of the profit you make inside of that wrapper is 100% tax-free. Part 3. Mindset. Staying calm when the market isn't. I'm waiting for the right time to buy is the most expensive sentence in the English language. The stock market doesn't go up in a straight line. It zigzags. You will see red numbers on your screen eventually. The key is understanding that a drop in price is only a paper loss. It's like the value of your house going down. It only matters if you try to sell that today. You only lose money when you panic and sell at the bottom. Time in the market historically shows that the longer you hold, the lower your risk. Instead of trying to time the market, set up a monthly investment, let's say £100. When prices are high, you buy fewer shares. When the market crashes, your £100 buys more shares. You are essentially buying the dip automatically every single month. Part 4. The return on investment supercharger. Investing in you. The stock market will make you wealthy over 30 years, but investing in you can change your life in 12 months. While the stock market offers a solid 7 to 10% annual return, investing in yourself can offer a 1000% return on investment or more. This means spending money on a skill that increases how much you get paid per hour. Taking an example of an IT career switch, let's look at the real-world example. Let's say you are working in a general IT support role, earning an average salary of £32,000. You spend £1,500 on a high-level training course and the exam fee for a cybersecurity certification. The outcome? Within 6 to 12 months, you transition into a cybersecurity analyst role. In 2026, the median salary of this role has jumped to £60,000. Let's do the math. The initial investment was £1,500. The salary increase is £28,000 per year. The first year return on investment is 1,866%. That 1,500 investment pays for itself in less than a month of your new salary. This is the fast lane. The more you earn through skills, the more money you have to pour into tax-free ISA, accelerating your journey to freedom. Investing isn't just about stocks, it's a two-pronged strategy. Use the stock market to grow your wealth over time and use self-investment to grow your income right now. If you found this video helpful, give it a like, subscribe for more beginner-friendly finance content, and let me know in the comments where you are on your investment journey. Thanks for watching, and I will see you on the next one.